you'd have 925,000 for the high, and a 10% increase on the current would be about 972,117. You should have close to those numbers for the first line. Might be a bit off from rounding. Okay. So in COGS, you could do it just based upon percentage of sales. I actually did it the long way with taking beginning inventory, which is the current balance sheet inventory level, add in purchases, less ending inventory based upon 120 days. That's the more complex way to do it, but you get more complete information based on what the inventory would be for the balance sheet. But this number is from the last year, I think. Yeah. And you don't have to use that exact percentage. 65.8. Okay? But yeah, I think you can make arguments to use a number that's a bit different from that if you want to.
I used an average for the 3 years.
You do a 3-year average. You could take the lowest of the last 3 years. I think that's fine.
What do you want the highest of the last 3 years? Just to be a little safer?
Sorry, the high in the last 3 years. Yeah, that's what I meant. Everyone happy there?
Yeah.
Okay. So your gross profit will be whatever your math is to sales minus COGS. And then I go to the next page. All right. So they didn't give us a lot of direction on these. So there's we can discuss. Don't let this freak you out. There's reasons why it might differ. So you can use the same number as last year. I suppose you could take a percentage of sales, but I wouldn't want to be seeing these guys taking out any more money given that they're coming to us for a big loan. All right. Anyone have anything else?
I added 10% from the year before.
Okay.
Just so you have a realistic picture of the low and the high.
Okay, that's fine.
So what did that give you, RJ?
75,000. So increase from 9.6 to 10%. So 75,694 for the low, 75, and it's the same for low.
Okay, that's fine.
I again used an average and then based it off of sales. So you're looking at 72,000 for the low and 85.
I think if it's in the neighborhood between $65,000 and $75,000, you wouldn't be cool if these guys paid them much more than that. Okay, that's fine. So wages, you could use the same number or the same ratio.
I increased it to 10,000.
Did you increase it?
Yeah.
I use the same.
So you're being conservative in a way, because you're kind of saying, well, what if they went up?
Yeah.
But I would also want to see if the bank manager, these guys are being as lean as they can. But it's conservative to let it be bigger. So
Because
that's
it
fine.
projects growth. Right?
Yeah.
So you're kind of following a trend because you can see it increases over years. So it's a
Yep.
gross or my
Doesn't
knowledge.
The main thing that I'll be evaluating, guys, is that you're putting some type of rationale here.
This has to be.
Because I'm not going to look at the number in isolation. I'm going to see what your rationale is. Yes, sir?
I use the same because the COGS have the subcontract, so anything extra work they just put it in the subcontract.
Yeah, that's fine.
They didn't say that they were subbing.
We don't. It didn't explicitly say. We get very much information in terms of how they plan to grow going forward. Okay. Auto travel, again, you're going to be in that neighborhood. Could use a ratio, you can see the same number. I mean, they're not, like I said, they're expanding mostly to rent, so I wouldn't see big changes in their auto expenses given what the strategy is. Their rent should not change.
I made a note that might because it's expansion, so we might charge them something on the rent. Because it's the upper floor is theirs at least.
Yeah, that's fine. That's
You pay
reasonable.
by square foot.
Yeah.
That makes sense.
Yep, that's fair. So accounting can be same number. Add-on promo, use a ratio, telephone, insurance can be the same. There's an argument insurance could go up because you might have more insurable floor space. So that could be reasonably upfront. So bank charges and interest will be the same last year, and then add any additions because they're going to take on more debt. So there's a really good argument to increase it, but they don't tell us by what rate. So you can look at how much more debt are they taking on relative to they are, and increase it by that amount. You could use the same amount for last year. This is kind of fuzzy.
The thing that didn't make sense to me was that it was the balance sheet, what they have on the loan.
They might have paid more principal.
Yeah. No, it's true. And it's, yeah. It's hard to explain why that is. There should be a correlation
I
between
mean,
bank
it
charges
could
and
be
interest.
because of
and the
working
amount of debt.
capital though, so maybe they at some point paid it all down for a few
If
months.
they're aggressive in playing the principal, that's all, the only thing that would explain it. Okay. Employee benefits, could be the same percentage or the same number. Utilities, there's an argument there that that might go up if you got more floor space. So you could use last year's number or go up a bit. Credit card charges, if the business is gonna expand, using a ratio makes more sense than using the same number as last year. So depreciation, it's always gonna be the same thing, right? They told us they're gonna take on $5,000 in fixed assets. I don't know if they told us a lifespan, so your depreciation rate could be different. I use 10 years, I don't think there's any rationale for using 10, you could use 5 or some other number. But the idea is you're gonna take last year's depreciation number and add another number on top that takes account those new $5,000 in assets somehow. So the math doesn't have to match, but the procedure should. Okay?
So if you didn't add the assets, it's wrong.
If you didn't add in the new asset, yeah, if you use the same depreciation number from last year, that is wrong, because it's gotta go up, you're taking on more assets.
Okay.
The magnitude by which it goes up will depend on the lifespan that you're estimating. And that can be anything, because they didn't give us one. Okay?
Question about like the supplies and office stuff, because I said there was an expansion of 5,000. Could that be put there because, you know, they're getting more fixtures?
So fixtures is a fixed asset.
Oh,
So
so it
the
could be.
balance sheet's gonna show $5,000 more, it's not an expense.
That was extra.
Yeah.
Okay.
No, that's a good point to raise, but that's people can get mixed up.
Yeah.
The $5,000 is not an increase in operating expenses, you're purchasing an asset, and that'll be reflected in the depreciation expense of the income statement. Okay? So it would be incorrect to count that as a supply or miscellaneous, because it's not, it's an asset purchase. Okay? But thankfully, the magnitude of that error is not gonna be huge, it's only $5,000, but conceptually, there is a distinction there.
Okay.
Okay? So your total operating expenses depend on how yours all add up, and then you estimate income tax at 25%, and you'll get some type of net profit number. So your numbers will vary from mine a little bit, but again, I'm just looking at the rationale sound here, okay? If I look at the numbers, it's taking forever to figure out your math. If I look at this living thing, I'll evaluate. Okay? Was there anyone that did not provide this middle section on the rationale for each number? Because that's the main thing to make sure you're providing. Okay. So let's just tier some ranges in terms of net profit. So this is between 49 and 70. What was your range, RJ?
Net earnings 14 and 42.
14 and 42. So you went higher on the expenses, so it's much more conservative, right? Okay. The last thing you want to do is overestimate the earnings. What did you have, Chris, for a range?
44 to 59.
Yep. Okay. David?
45 and 52.
Okay.
Yeah, 40 and 50, but.
Okay. So a lot, very, very close. So yours are a little bit on the low side, RJ, but that's okay. You're kind of saying, well, the last thing I want to do is overestimate the earnings. Okay. So you guys feel comfortable? Okay. I'm doing great. 5 after 8 o'clock. All right. So now we go to the balance sheet. Sorry, statement of retained earnings. So the beginning of retained earnings should be the same for everybody because those are coming off of retained earnings from the retained earnings statement from before. Okay. You're going to add whatever your own net income numbers are, and then it's going to give you a subtotal less any dividends. So the dividends were, I think, last year $2,500. So I just left them the same. You could choose to get rid of dividends if you want. But yeah, they paid themselves $2,500. So you guys gotta recognize, right? Like they increased their executive salaries by $10,000, and then they paid themselves a bigger dividend.
The bigger red flag is 1991. They made no money.
They still took money out of the business. 2 for me, 1 for you. You know, like you divide up the Halloween candy? Dad accounting? Oh, those look good. 3 for Dad, 1 for Pierce. The daddy tax. Bring the shit home, there's an inspection fee. I'm not charging you rent. Cost me a good $80,000 last year. Give me 4 fucking rockets. It didn't cost me. I don't want to do that. Give Daddy some candy. I'll pay the rent. Okay, so your numbers will differ, but you figure out what dividend you're paying. You guys happy with that? Yeah? You all see my kid at Harrison, like, oh, your dad, you had a tough life. All right, let's do balance sheet. Okay, so you might want to leave cash blank and use it as a plug number, or you could put cash at some arbitrary number and use the liability as a plug. It's up to you. You guys with me? Okay. Accounts receivable. Why did I increase it to 20 days?
I just based it on
What was it before?
50.
15.
I guess I'll just be super conservative, assuming if he was continuing to be bad at getting his money. You could leave it at 15. You don't have to have that number. I think I was just being conservative, assuming that he didn't have his act together. Inventory. So I did it right. When I did the COGS, that's where I get those numbers, because I based it on a certain range of inventory. So I based on 120 days of inventory,
Oh, okay.
and that's what it was recently.
Did it on 115 days, which was
Yeah, that was
the 1992.
Let's just see here. Yeah, okay. So that was me just being conservative.
Okay.
Perfectly fine to use 150. Okay, so your number will probably differ from that a little bit. But I'm looking based on some days number, not some just using the same number from last year. Prepaid expenses I just left the same, but you could move it up or down. I didn't see any reason why it would change much. So this is where you had the $5,000 in fixtures. And then you're gonna depreciate those fixtures at some level. You can choose the lifespan, it doesn't have to be 10 years. Okay? And then you'll get fixed assets back. So your number should be fairly close to that for fixed assets. Goodwill doesn't change, so total assets is around there. Or it could be just, you know, not knowing what cash would be as a plug, but you're gonna be in that neighborhood for fixed assets. Because the only thing really changing here is the inventory and the fixtures. Everything else is pretty much the same. You guys feel comfortable with that?
Yeah, is it just me or did everybody get, I got 1991, they're $1 apart.
Say
Oh,
it
yeah, I
again.
did notice that, but I just went.
What,
went
what number?
1991, the balance sheets are $1 apart.
I didn't
Once
know
if you
that.
put them, take the exact numbers and put them on a spreadsheet and calculate it,
Yeah.
the total assets versus total liabilities are $1 apart. It isn't, I don't think it makes relevance to anything, I know they're supposed to
Can
balance.
you show me, you need update on this from the case?
Yeah, 1991. If you take the total assets and actually add them up to the total and then the total liabilities,
Yeah?
it's actually $1 apart. The top one's 124 to 336. No.
Right. Oh, I see what you're doing.
Yeah. No, there's no decimals.
Yeah, so in the
It's just simple
spreadsheet
math.
too. I just.
Something like
So there's an adding error somewhere? These two numbers are supposed to balance though. Which ones are $1 apart?
It's those two numbers are $1.
Oh, 189.
No. Well, that's off too, but
Yeah, if you actually.
that's a
add-
typo.
Okay.
But if you actually add the ones up on the 1991 column, you do that math.
It should be 124, 334? Or
The
336?
top one's 336. The bottom one's still 335.
Okay.
Add $1 to Goodwill.
Yeah. Case ready, I'll go. Not uncommon. If you're finding those levels of errors, it's like, shows you that you're doing deep work, so.
It's part of the task.
I always put like at least 3 mistakes in the case.
Just to see if you're paying
See.
attention.
Keep everyone honest.
And then you see the big use of the money.
Oh, that's a big typo too.
One of these apples has a razor blade.
Yeah. And the actual number is 189, so it's